Good day and welcome to Punjab Chemical and Crop Protection Q3 FY2024 conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Darshita Shah from Antique Stock Broking. Thank you, and over to you, ma'am.
Yeah, hi. Thank you, Ria. Good afternoon to all the participants on the call. On behalf of Antique Broking, I welcome you all to Punjab Chemicals and Crop Protection's third quarter FY24 earnings call. From the management side, we have with us Mr. Shalil Shroff, Managing Director, and Mr. Ashish Nayak, CFO. I would like to hand over the call to Mr. Ashish Nayak for his opening comments, post which we shall open the floor for Q&A. Thank you, and over to you, sir.
Thanks for that. Good afternoon, everyone. We welcome you all to our Q3 and 9 months FY24 earnings conference call. On the call today, we are accompanied by our MD, Mr. Shalil Shroff. We would like to begin by acknowledging the challenging market conditions agrochemical industry is currently undergoing. Demand from global manufacturers continues to remain muted due to high channel inventories and adverse weather conditions, thereby impacting exports. At the moment, customer is extra cautious to build inventory, and hence more buying is happening closer to the season. We anticipate a recovery in the demand from FY25 onwards. We are all aware that the global landscape for agrochemical industry is undergoing major shifts marked by evolving regulatory requirements, changing consumer preferences, and macroeconomic uncertainties. In response to these challenges, we have been proactive in realigning our strategy. Our new product launch remains on track, and customers are happy with the progress that we are making. Our efforts on R&D are yielding good results. We have reviewed our existing product portfolio afresh, and all our products are very strong in the market, and we have competitive position due to quality and cost. Recovery in demand will resurrect our market position. We continue to work aggressively to maintain our quality and cost leadership. In response to these challenges, we have been proactive in reevaluating and adapting our strategies. We are being nimble to take quick decisions, exploring all opportunities to serve market and expand our market base, tracking global and domestic market very closely. On the P&L front, revenue from operations for Q3 FY24 was rupees 214.10 crore, and for 9 months FY24 was rupees 737.7 crores, as against rupees 260.5 crores in Q3 FY23 and rupees 811.20 crores for 9 months FY23. On the geographical split, domestic market contributed rupees 103 crores, and international market contributed 111 crores in Q3 FY24 and 356 crores in domestic market and 382 crores in international markets for 9 months FY24. Gross margin for Q3 FY24 was 41.4% and for 9 months FY24 38.8%. Higher in both cases as compared to 36.3% for Q3 FY23 and 9 months FY23 as well. As stated in our earlier investor presentations, we have laid a lot of focus on process re-engineering, and improvement in gross margin is on account of the improved raw material efficiencies as well as the product mix based on the prevailing market conditions. EBITDA for Q3 FY24 was 12.2%, and for 9 months FY24 was 13.5% as compared to 13.4% in Q3 FY23 and 12.5% for 9 months FY23. Our production facilities at Derabasi and Lalru are functioning at 71% for Derabasi and 49% for Lalru as of 9 months FY24. On the balance sheet front, as part of the asset renewal process towards improving efficiencies, cost optimization and improving safety, we have incurred 22 crores, which was funded only from internal accruals. There was a marginal increase in net working capital from 63 days to 76 days. The debt equity ratio as on 31st of December continued at a very healthy 0.3. We continue working on new chemistries and identifying potential molecules. Currently, we have several products in the pipeline across different categories, including advanced intermediates, fungicides and herbicides, as well as in specialty chemicals. We will start realizing its potential from FY25 onwards. We have started to receive commercial orders for some of our advanced intermediates and specialty chemical molecules, and supplies have started. We expect to finalize supply agreements over the next 2 to 3 quarters. We have also received approval for some new products as well as registration for few products in the European Union. We expect to capitalize on these new products from FY25 onwards. In fact, in 9 months FY24, some of the shock of reduction in demand for existing products was absorbed by these new products. Looking ahead, we remain cautiously optimistic about the future. As market conditions remain turbulent, we are committed to staying agile and adaptable, ready to adjust our strategies based on emerging market trends. Our focus on innovation, sustainability, and operational excellence positions us to weather these challenging times. As stated earlier, for our new products, we have shortlisted a few locations for a new site. We are also working on our expansion plan, including a new production block in the agrochemical site at Zarabasi. With this, we now open the floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Jainam Gilani from Swan Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. So on the previous call, we had mentioned that we were going to launch 3 molecules in quarter 4. So what is the status for that, and what would be the market size for these?
So you're right. That is what we had spoken about it. As we understand that the one product we have already got the registration and commercial quantities have started. The other 2 registrations we are expecting to get later this year. And thereafter, obviously, we'll start the supply chain taking it forward. The quantum of this total business would be in the tune of around between 100 to 150 CR, which will grow as registrations we get globally in other sectors in the world.
Okay, thank you. And so we were also planning to get approvals for our Australian...
Can you please talk a little louder?
Yeah, sir, can you hear me now?
Yeah, I can hear you, but you're a little... yeah, okay, go ahead.
So we were looking for approvals in the Australian and EU markets. So have we received these?
Yeah, so the registration in Australia we have received, but unfortunately because of the climatic conditions there has been delay. The business is with Punjab. The customer is, we are in touch with the customer on a regular basis, and we expect by Q3 the sales should start in Australia. As far as EU, one of the products, as I mentioned, the registration has already come in, and we have started commercial quantities.
And so overall, do you think the pricing is bottomed out in agrochemicals, and how do we see the demand going forward? And what would be the growth guidance for the next 2 years for the company?
So as we said, Punjab, we work very robustly on bringing down cost in terms of the product. Our R&D is continuously working on the existing as well as new products. And I'm happy to say that as far as our portfolio is concerned, we have looked at it globally with the competition. I think we are at par, and maybe in certain ways we have a plus point matching with the international demand. Now going forward with the forecast, as on date, if you see that still many companies which you must have seen the results from the Indian as well as overseas are still struggling with these inventory levels across the border. And again, with the certain climate conditions, which still have not, the inventory levels have not still tapered down. But we believe by Q3 or beginning F25, things should be much better. Moving forward, as far as Punjab is concerned, we have a very strong portfolio, a strong customer base, and the discussions which we are happening are continuously going on. Only because of certain inventory levels, the products have taken delays, and that's where also few of our registrations, which will now fall in place by Q3, we will be able to start commercial supplies and take it forward.
So what would be the contribution from the new products in FY25, if you could give a rough figure?
So as we have always told you that, you also see over the last 3 quarters our revenues have gone down. Again, it's because of the conditions and the product demand, and especially the supplies which are still with the customer. So moving forward, we believe that we will be in a position to overcome this and then get back into our routine, what we are doing. As far as margins are concerned, we had, if you recall, during Q1 we were.
Hello.
Ladies and gentlemen, we have been disconnected by the management line. Please stay connected till we connect the management. Ladies and gentlemen, management line has been connected back. Mr. Jainam, you can continue with your question.
Sir, can we say that our revenue would be flattish till Q3 FY25? And have we faced any deferment in our contracts that could be visible over the next 1 year?
Sorry, sir, I think the management light is on mute.
आपण ज्या व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्डवर ठेवला आहे. कृपया लाइनवर कॉल को होल्ड पर रखा है. कृपया लाइन. आपण ज्या व्यक्तीशी.
Ladies and gentlemen, requesting you to please stay connected till we get on touch with the management line. Ladies and gentlemen, the management line has been connected back.
Yeah. Can we have the call again? The question?
Yes, sir. Jainam Gilani, can you please repeat your question?
Yes, sir. So have we faced any deferment in our contracts for CRAMS? And if not, can we expect that our revenue would be flattish till almost Q3 FY25?
So as far as the contract is concerned, there is no deferment. In fact, we have added more contracts to our business portfolio. As far as the product goes, yes, because of the inventory levels, if you see our revenue on a quarter-to-quarter basis, because of that, the business has been deferred. But as I did mention to you, we are very optimistic and we are continuously discussing with our customers, and we are hopeful that by Q1 or Q2, everything should fall in place.
Okay, sir. Thank you. I'll get in queue. Thank you.
Thank you.
Thank you. Next question is from the line of Viraj from Simple. Please go ahead.
Hello.
Yeah.
Yeah, sir, just a couple of questions. First is on the gross margin. If you can just probably give some perspective in terms of what has driven the improvement in gross margin for us.
So, as I mentioned in the commentary as well, the gross margins have from 36.3% to 41.4% in Q3 FY24. And for the 9 months, it has gone up from 36.3% to 38%. This is primarily on account of two factors. As we have been stating earlier, we have been doing a lot of process re-engineering as well as improvements in the processes, which has helped us to improve upon the raw material efficiency. So that is one of the major reasons for the improvement in the gross margins, in the raw material margins basically. And the other reason is obviously the product mix at the end of the day. So these two factors have, and some of that has also come in from some of the newer products which I discussed in my commentary. So it's a combination of all these factors that the gross margins have improved. Yeah.
Hello?
Unfortunately, we got disconnected from Viraj sir. Moving forward.
I thought it was something went.
Moving forward. Next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thank you for the opportunity. And first of all, a very commendable performance given what we are seeing in other agrochemical companies on the technical side. But just wanted to know on our new product launches, are we seeing any deferment of launches from our partner side or from our customer side as well, that they want to defer the launch to launch by another 6 months or a year or so?
Can you just repeat? I lost you in between. You asked from the customer and then I lost you.
So I was asking if there's, the customers are also deferring their buying for the new product that we are planning to launch, given the scenario of what is happening in the global agrochemical markets.
Yeah, so as we said that, one of the products we have got the registration and we have started moving commercial quantities. By and large, with the new products, we have discussed with our customer and we don't foresee much problem, but the offtake which we had thought of that would happen would be tapered down a little bit, but fortunately the discussions which we have had, and we feel very optimistic that by beginning of next year, that is Q4, things should be much more normalized and we'll get back into the area of what we had targeted in terms of quantities and revenue.
And as you had said in your earlier answer that, you expect the global agrochemical market to go through challenging times till Q3 of next year. Is that right?
Correct.
Okay. So, one more thing, if you can elaborate on this a bit. You had spoken that one of the major reasons for improvement in gross margin was the product mix. So, what exactly, are these products? Are these extremely high margin products that the new launches that we have done over the past year or so? So, are they very high margin products? Plus, haven't this product also seen some price decline given what is happening in the global agrochemical market?
So basically, as we said, product mix. So Punjab, we are into agrochemicals and performance chemicals. So on the agro side, as Ashish did mention, and I think somebody had asked a question but he got disconnected, that our R&D has done a good job to bring down costs. So that's where the competitiveness has come in. Unfortunately, because of the inventory levels, we could not achieve those volumes. But we expect, as I did mention around 30 seconds back, that things should fall in place by Q3, Q4 of this financial year. As far as the product mix, yes, in performance chemical, we do make some special intermediates which go into both pharma as well as agro. So that's where the margins have been a little higher. And there we have not seen much of an impact. But please understand that these intermediates which go into pharma or into agro, the customer has launched the product a year and a half back. By the time they got the registration, they got the FDA approvals and all. So we expect this business also to grow substantially and bring in a better realization to the overall portfolio of the company.
Sure. And sir, how many launches are we planning to do in FY25?
So we have 3 products which are registered, out of which one we have already started commercial. The other 2 we expect to start in Q3, Q4. That's more on the agro side. We have also got into a long-term agreement with one of our customers for our agro product, which we expect to launch again by beginning of next year. And on the performance, where we talk of intermediates, we have approximately 4 intermediates for which already one has started. The other 2 samples, everything has been approved, and the commercial quantities will start post Q3.
So almost 8 products that we are planning to launch next year, including the one which has already been launched.
Yes, and these obviously, as I said, that with the registration process and especially with the intermediates, few are these drugs which we work, which go into the pharma sector, and for them to get their approval in different markets. So we have got an approval in Europe. So that's where we will start in Q3 of this year, and hopefully with the discussions which we are having with the customers, hopefully by next year we would get in the USA.
And on the performance chemical intermediate side, what can be the market size for these products when we scale up?
Yeah, so these products, the 3 which we are right now currently already approved and which are one which has started and the 2 which will start, should bring in a revenue of close to around 150 CR in the next 1 to 2 years and can grow by another 30% taking it forward.
Okay, so 150 CR from this product and 150 CR from the agrochemical products which we are planning to launch next year. So almost 300 crore kind of potential which we can realize, let's say in FY26, if not FY25. Correct. Okay. Sir, on the gross margin thing, this quarter we have almost touched, 41.5% kind of gross margin. So let's say, when things normalize in the agrochemical market, what will be our gross margins? Will we remain around 36-37% gross margin that we have done previously, or we'll see an uptick in the gross margins in this gross margins of 41% or above 40% are sustainable?
See, we are in a chemical sector, and always we are, the R&D is always working very robustly hard to take these margins forward. And whenever we launch or whenever we start a product, you will agree with me that the initial, we have a certain benchmark. Based on that, we launch the product. And then obviously there is a margin where we need to improve. So definitely the team is working, and we are very confident that this margin will increase as the product we start manufacturing, we make more the quantities. Once the quantities get more, the production people, the R&D team work very hard to ensure that we achieve what is our ultimate goal. And our ultimate goal is to increase our margin, and that's where you have seen, even with the revenues going down, we have tried to maintain in this volatile business atmosphere. I think as far as Punjab goes, in Q1, Q2, Q3, we have done a fantastic job, and even Q4, we believe we should be on the same line.
Sure. Okay. Thank you, and wish you all the best.
Thank you.
Thank you. Next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
So just one clarification on this new product line. So until last quarter, we were talking about 3 AgChem, in which you were mentioning that two, you have got registrations and were thinking of commercials in H2 and full effect in 25. So in these 3 products, is there any changes from this call?
No, there is no change. As I did mention, that one product we have already commercialized, the shipments have started. The other 2 will start beginning Q3 or beginning of next year, 25. Q4. Sorry, Q4. Q4 of next year, yeah?
So which means what was supposed to come in FY25 is now more or less put up in FY26 then?
Correct. One of the products.
Yeah, so there is a delay of 1 year.
Correct.
Okay. My second question is, on the revenues that we have reported in the 9 month and whatever revenue we have reported in the quarter 3, can you give us some idea on the volume performance? What kind of volume decline we would have seen in the quarter 3 and in the 9 month?
So not much volume change if you look upon it. Whatever impact is there is primarily on account of the price. Okay, there has been a marginal decline in the volume, but nothing major as such.
Okay, nothing.
Please understand, with the competition happening, especially with China and other players coming in, as we did mention that our R&D has done a good job. So with the prices of certain products which were X has become minus X, but we have still maintained the profitability. As we said, yes, volumes have gone down, and that's where overall, the impact comes on the revenue and then onto the margins.
Okay, and the commercial product, the supply for which you have, one of the product where it is commercial now, what kind of revenue are built in for 24, or it is also a 25 product?
So, no, FY24 we already started commercial sales on these products. Yeah, but we will not be in a position to comment on the value or the volumes which we have recorded in this particular quarter and what we are anticipating in the quarters ahead. Yeah.
And the 3 performance chemical which you mentioned in this call, the supplies for those 3 performance chemical is 25 or is it 26?
25.
So between now and 25, you will have 1 agro and 3 performance chemical to drive your growth.
Absolutely. Those are the 3 products which will help in driving. But please also understand, the existing product volumes which were there had gone down because of the inventory levels. And as I said, that once the inventory levels taper down, we already entered into the new year, because for an Indian company it is March to April, but for the other companies is the calendar year. So we expect a good offtake of the existing products, not coming to the full, but at least increase by at least another 10 to 15%. 10
to 15% is for company?
The existing product.
Existing product, 10 to 15% in FY25.
Volume, 25, yeah.
Oh, okay. Thank you very much.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all participants in the conference, please limit your question to strictly only 2 questions per participant. Next question is from the line of Bhavya Gandhi from Dalal & Broacha Stock Limited. Please go ahead.
Yeah, hi. Thanks for the opportunity. So just wanted to understand the broad terms and conditions of CRAMS business. So, I mean, is there any minimum offtake guaranteed or any minimum margins? Because in this kind of challenging environment, I mean, just wanted to understand how are the contract terms, broad conditions, if you can just throw some light on that. And what is the price revision duration? Is it like an annual revision or is it like a quarterly or half yearly? Yeah.
I think many people had asked these questions. So as far as the contract goes, yes, there is a take and pay. Also, there is a cost where the raw material is auto checked every quarter. margins and the variable cost are per year, but if there is something extraordinary, we sit with the customer. But as you rightly said, that right now, with the conditions in the market, I cannot tell a customer that you have a take or pay or a lifting of certain quantity and now you have not lifted. So in bad times, good times, we have to work more on a fair ground to understand each other, and I think this appreciated by both us as a supplier and they as a buyer, which builds a stronger relationship. Now with these customers where we talk to several of these people, we are not looking at just focusing on this one product, but over the years they also have a growth plan. Now can Punjab be part of the growth plan? As I've told you, Punjab, we want to be a strategic supply source for intermediate AIs to various companies across the board. So during bad times, we don't pressurize this, but this is well understood between us to keep that we have worked together to ensure that we both ensure to sell the product. But as and when the market and the demand, the supply gets a little cleared from the inventory level, definitely we'll get back to our original position.
Okay, got it. And just one last question. Are these molecules specialty in nature or are they generic or patented? If you can throw some light on that as well. Yeah.
So as you know, there are two products we already do which are patented by a Japanese innovator. The other 4 or 5 products which you do are generic, but again, a few of them where Punjab controls almost 80 to 90% of the market share.
Got it. Thank you so much. Yeah, that's it from me.
Thank you. Next question is from the line of Chirag from White Pine. Please go ahead.
Yeah, thanks for the opportunity. There are just 2 questions. First is you mentioned a comment that there has been a significant degrowth or decline in the old molecules in 9 months. So can you quantify that? What kind of decline you were referring to when you say significant? And maybe if you can also indicate how big they were earlier before the decline and now how much they are in overall revenue.
Well, first of all, I stand misquoted on this. I never said there was a significant decline in the volumes. All that I said was there was some decline for some of our existing products, which was made up by the newer products that we launched. Okay, and as to because it's a multi-product company, every product the range may be different. There are some products which we have managed to do better than what we did last year. There are some products where we managed to reach the same levels as last year. There are a few molecules that we did a bit lower as compared to last year. So it's a mixed bag. I won't be able to single out because as a strategy, we do not name any products or molecules in any of our investor presentations. Yeah.
So just to add to what Ashish said, that even if you see on a quarter-to-quarter basis, the volumes have gone down, is again because of the inventory levels. Now, if we bring back to these inventory levels, as we have said that last year we closed at around 1,000 CR. This year our plan was between 1150 to 1200, which of course we will not be able to do that because of the decrease in volume, again because of the inventory levels. And as I said that we are very positive, which we are discussing with the customers, that during this year and the financial year of April to March, we believe we could taper it up by at least 20% extra in terms of what quantities we have done. The full business, which potential is there, we expect should happen post 25 or 26 of the next financial year.
Fair point, sir. And the second question is, while you have done a good job on the gross margins and congrats to the team, I am looking at other expenditure and it seems to be very stuck at around 400 crores kind of a run rate. 40 crores kind of a run rate.
Yeah, so other expenses, there are certain expenses like EHS expenses. Some of the costs have gone up marginally. Okay, so that's one of the main reasons why these have remained constant. We have also put in a lot of efforts in maintenance capex as well, which comes as a part of my maintenance expense. So all these other factors, what we have basically been trying to do is, while in some cases the volumes there may be a drop, but we see that there's a good future going ahead and we are preparing ourselves for that in ensuring that our people our equipment and our resources are in good working condition so that we are able to make best when the time gets better. Yeah.
Okay, sir, just clarification, because your maintenance, repairs and maintenance that you have been doing seems to be reasonably high over last 2-3 years. So when the cycle turns around, we can actually see a drop in this number, or is there any preponement or bunching up of this expenditure, so there could be a double impact on your margins? Is that the way to look at it?
What I will add that, during the various calls, I think Vinod, the CEO, had mentioned that we are re-engineering, redoing our plans. So almost close to around 60 to 65% we have done it in terms of looking at health, safety, environment, looking at better utility in terms of pumps, etc., recovery systems. Moving forward, as new products come in, definitely we will be adding such recoveries, because today cost, as we did mention, and few of you have appreciated that the R&D and the team has worked hard, and that is where we have been able to maintain our margin even with the revenues going down. So please understand that in a chemical company, re-engineering, re-looking at processes is a continuous daily routine. Every morning you get up, you make your coffee, but we always like to look at that, how can we make it more efficiently and effectively with not deteriorating the quality. So that's what is the motto, and that is where Punjab, in terms of our CRAM business around the world, we started with one Japanese in 2010, 11. Today we have 4 Japanese who are working with us. We have Europeans, we have Israelis, and within Indian companies also, we are working very robustly in terms of supply chain. We want to be a strong strategic supply chain to these people, for which health, safety, environment has to be a top priority.
Thank you. Thank
you. Next question is from the line of Viraj from Simple. Please go ahead.
Yeah, most of my questions have been answered. Just had few questions on the product mix part. If you can just provide some color in terms of the top 5 molecules, so with this whole moderation in the base molecules, how is the top 5 mix change for us?
So as we discussed that among the few agro products, because of the inventory levels still lying within the customers, that's where the offtake of that product has not happened. As I did mention around a minute back, somebody had asked us that based on today's discussion, we believe that these inventory levels should taper down in the next 6 to 8 months, maybe 9 months, and that volumes would start picking up to take it forward. As far as the performance chemical and the other sector has happened, even in the pharma, you have seen many companies have inventory levels not only based on agro industry, but even on the pharma sector. I'm sure you guys are watching them closely and talking to them. So that's where also the offtakes have been less. But the continuous discussion with the customer, they believe, and what we get a feedback from them, that they also within the next 8 to 9 months should see an inventory clearance in the global market, and gradually the pickup will start.
Okay, and in this quarter also we've seen an increase in interest costs. So what is it? What is driving that?
Well, the working capital has marginally gone up. So primarily that's the main reason for that. Yeah.
Because on an overall balance sheet basis, we have a... Yeah.
Pardon?
No, on an overall balance sheet, if you look, so one would logically think that the net interest, should be on a declining or on lower trend, but this is on an increasing base.
I know. So that's what I'm saying. The working capital requirements have gone up, as a result of which the bank working capital has marginally gone up in this quarter. Okay, so that's one of the reasons. They primarily on account of receivables. Some of the sales which happened was for a slightly higher credit period, and as a result of which the working capital requirement had gone up in this quarter.
But I think it is a very short-term phenomena. So please understand with the customers, sometimes not that our majority of our customers are multinational, but you can see that even the multinationals are having pinch in terms of their, working capital or their, with the cash lying with them. So sometimes, instead of we have a 60 days, we have given them 90 days. If it's a 90, we extended by 15, 20 days. As I did mention, in today's difficult times, we have to work closely with each other. But to answer your question, this is a very short-term phenomena. May happen in Q4 of this year. But moving forward, starting the next financial year, we should be back on track. And Ashish has been doing a fantastic job talking to the banks, and we are expecting, you will see that in the coming few quarters, you will see that the cost is further going down and the working capital gets back to the normal or a better. I'm pretty sure it will get to a better stage.
Just last query was on the capex. Any update you can give on the greenfield part of the capex?
So we have incurred about, in terms of cash flow, an addition of around 22 crores on capex. This is primarily at the existing sites at Lalru and Tarabasi.
No, we were looking for a fresh new site for a chem business.
Yeah, so as far as the business goes, as we said that because of the supply chain, there has been a slight delay, but the three products where we have got our registration, the work progress has started, taking it forward to ensure that as and when the product gets ready, we are ready for commercialized supplies.
No, sir, my question was on the greenfield capex side, which we were looking, given the kind of pipeline we had, we were looking for an alternative new site in addition to what we have at Dera Basi.
We have a few locations for that. These are, some of them are greenfield, some of them are brownfield. We are in the process of evaluating the same and then finalizing it. In the next couple of quarters, I'm sure we should be able to take a final call on this.
Okay, thank you.
Thank you. Next question is from the line of Bijal Shah from RTL Investments. Please go ahead.
Hello.
Yeah.
So my first question is that on the domestic side, over the last 4 quarters, we have seen revenues are down 25-30%. Now, is this driven? I'm sure this is driven by the market conditions. But on the domestic side, now do you see inventory levels having corrected, or even on the domestic side, you expect it will take 8-9 months for inventory levels to normalize?
So gradually the inventory levels have improved compared to international, but we still believe that for this financial year there will be still a struggle, and moving forward by quarter 2, quarter 3 of next year, things should get back to normal.
So even on, like we have a very low base on the domestic side, 85-90 crores, even on that, when we should continue to expect some decline going forward?
For the Q4, it will be flat, as I said, for this financial year. And moving forward, by quarter 2 of next year, things should stabilize much better. Because please understand, when we say performance chemicals, we also supply some specialty intermediates within India, and there also they have seen the same problem which is faced by the agro industry. And whatever we have discussed with these, and these customers are big. They're like Mile and Laurus, and they are big companies. And our marketing team has been in touch with them, and we believe by Q2 of next year things should much more stabilize. Yeah.
Okay. And this EU registration that you got, is it for the same product for which you got the Australian registration as well, or is this a different product?
No, it's a different product. The Australian product registration we already got in EU, so that's
Okay. Hello?
I'm so sorry, the management line has been disconnected again. Please stay connected till we connect back the management. Ladies and gentlemen, the management line has been connected back. Mr. Bijal Shah, please continue your question.
Yeah, one quick question. So this...
There is some digging work happening in our office, and that's the problem, you know.
No, sir, no worries.
Please go ahead.
Yeah. So my question was, this advanced intermediate order that you got, that is for the pharma side?
The product out of the three, two are for the pharma intermediate and one is for an agro intermediate.
Okay, but the one, okay, got it, three.
The one of the pharma intermediate, we have already started commercial supplies. The first quantity has already gone in. This is a little high value product which we have already started, and which is for the EU market, and we expect a good business this year. And I think next year, or maybe end of this year, beginning next year, we should get the registration in the US for this product. There is another pharma product where we already got the approval, the registration in place, and the commercial quantities will start post April, May of 2024.
Understood. That's all. That's all the questions from my side. Thanks.
Thank you. Next question is from the line of Viraj Mahadevia from Money Grow India. Please go ahead.
This is ridiculous. Stupid.
Yeah, please go ahead.
We're always got to reanalyze what they say. There's some cautious, stupid research analysts with the CYA.
Hello, Viraj sir, you're not audible.
We can't hear him.
Hello, hi, this is Viraj here.
Yeah, hi Viraj.
Hi, sorry for that. Apologies. Sir, you mentioned the sector is going through a lot of pains with the high cost inventory. With regards to our raw materials that we have bought, has largely the high cost inventory worked its way through the system, or it's likely to take another quarter or two as well, much like pricing?
So while we do not have any high cost inventory in our books, but yes, at the end of the day, our customers do have, and most of it has been finished off, and whatever balance is left, we expect in the next 1 or 2 quarters that should be out of the system. So that's the reason why our exports to some extent have been a bit muted. But I think most of it has already been corrected. Whatever is balance is left out in the next 1 or 2 quarters once the correction happens. The indications are looking good and positive. Yeah. And we are regularly in touch with our customers.
Great. Thank you. That's all from my side.
Thank you. Next question is from Rohit from iThought PMS. Please go ahead.
Hello. Am I audible?
Yes, Rohit.
Yeah. Good afternoon, everybody, and congratulations on a very decent performance given the tough industry environment. Sir, I have 2-3 questions. So one was, from your product portfolio, if I look at last 2-3 years, or let's say 2-3 years back, we were heavily concentrated on a couple of products from a revenue contribution standpoint. As of now, what is that today? And from an overall numbers point of view, can you broadly give us an idea that today, 2-3 years back, we were so many products, and let's say by end of this financial year, we will have so many products from our product portfolio. If that would be really helpful.
Yeah, so basically, as you understand that the markets are pretty, conditions are tight, and many companies with whom we are in discussion, and not that this business is absolutely confirmed, but there has been delay, because please understand, in agrochemical, there is a process of registration, and this registration process is time consuming, and obviously it's very expensive. So many of our customers, not many, at least 2 or 3 customers, have taken this a little bit on the back burner to ensure that at the moment their management has decided to first liquidate whatever the huge inventory, high cost material they have, and they'll look back onto these registrations. That's where that delay has happened, and that continues with same one of the intermediates, which we had talked almost 1.5 years back, which is absolutely on pipeline. Everything is clear, but the registration process has taken place because of this difficult times.
Okay. So, assuming that the environment reverses, so how much, like the registration process itself is time consuming. So how much time will you take to sort of do that and then start production and supplies to the customers? I mean, just wanted to.
Yeah, so we already said that 3 products where we have got registration, out of what on the agro side I'm talking. One, we have started commercial quantities, and the other 2 we will start close to end of this year. Intermediates, out of which 1 we have started, 2 we will start, as I did mention 30 seconds, 1 minute back before we got disconnected, post-April. The other 3 products registration, we have been discussing with the customers, and the process will start somewhere March, April. We expect for the commercial quantities, because all the samples, approvals, formulation approvals, everything has happened. But the commercial quantities will start post 2025, somewhere in their calendar year, if I say, or our calendar year, Q4 or Q1 of next year.
Understood. And sir, I mean, from a capex point of view, what is the thought process right now? I mean, I understand right now the industry is in some sort of a lull, but we had plans to sort of get to 1,500 crores and then beyond as well. So for that, how are we thinking about capex? If you can just talk about that as well.
Yeah, so on the capex front, one is that which is our regular capex, which I think Ashish, somebody had asked, he had already answered that question. As far as moving forward is concerned, 2 things. One is our new site, which we are working on, and we expect in the next 1 or 2 quarters we should finalize that. And on the regular capex of this product, we believe that post-April, May, we will at least start building up a new block to cater to 2 of these products. And closer to end of the year or beginning of next year, we'll have another phase of capex which we'll do. Market conditions changes sometimes overnight, so we are expecting positive. We are in constant touch with our customer, and based on that, we will evaluate and then take appropriate action to ensure that we have that system in place for supplying the commercial quantities.
Got it. Fine, sir. I think this is pretty much from it. Just one question, sorry, if I can squeeze. So this quarter, the gross margin was very good, and we've been talking about product mix over the last few quarters. So, I mean, from a sustainable point of view, do you think that 40% around is a gross margin that we would be able to sustain on a yearly basis? I'm sure quarterly there may be ups and downs, but on a yearly basis, can this gross margin be taken as like a more sustainable and which we can continue in the future as well?
Yeah, so as we said that, from the R&D front and the, becoming more cost effectively, that is our motto. And we expect, yes, you're right. I mean, that's where our aim is to go 40 plus.
Sure, sir. Thank you very much. I'll get back to that.
Thank you.
Thank you. Next question is from the line of Jainam Ghelani from Swan Investment. Please go ahead.
Thank you for the opportunity. So just wanted to clarify, you indicated that in FY26, from the current base, our existing molecules will grow near about 10 to 15%, and there will be near about 200 to 300 odd crores contribution coming from the new molecules. Am I right?
No, so from the existing products, as you said, that now with the correction happening in the market, with the inventory levels gradually going down, we expect for the next financial year, the existing products should grow between 10 to 15%, maybe a little more, but that's what we have been in constant touch with the customer. And on the newer products for this financial year, we expect to add at least anywhere between 200 to 250 crores worth of additional revenue in terms of new products.
But please try and understand, any new product, it takes time to scale up the production and reach those values. So, over a period of time, that's the potential that these products are. And also do keep in mind that these are not the last products that we will be rolling out. There are other products which are in the R&D pipeline. So as these products do establish themselves, there will be other products that will come in. So As far as revenue growth is concerned, we have definitely identified products over the next 2 to 3 years that are the products that are going to be launched. So yeah, we do have a good, strong product line in the R&D pipeline. Yeah.
So that means consistently 10 to 15% of the annual cargo growth in the revenue one can expect in for the next 4 to 5 years once all the product comes in place.
That's what we are targeting.
Yeah, and in fact, 10 to 15% would be for the next 1 to 2 years, and following 2 to 3 years, we expect that you saw us, I think in 2 years back, we grew by almost 25 to 30%. So our aim is based on today's market conditions, be a little bit not conservative, but the way the product pipeline looks between now to 5 years, we expect between 10 to 15 to gradually go to 25 to 30% in the next 3 to 5 years.
Good. Thank you for that. So I wanted to check the other thing on your product pipeline also, because as you said that there are 3-4 products which are in the agrochem front and 3-4 in the performance. So that gives us a total of 8, and we are supposed to launch a pipelines of near about 15 odd products. So can you give us or throw a light on the remaining 7 products?
Yeah, so as we mentioned that, every product, because of the stressfulness in today's environment, things have been delayed. It is not that the business opportunity with these customers have lost, and we should get some more clarity. So I would like to answer this question that yes, there is a absolute green light. The business is there. The customer is very eager to take this forward, but there has been delay because of the challenging environment. And I believe by Q1 or Q2 of next year, we should be in a position to talk more about what is with the balance 7 to 8 products which we are planning to launch and how we will roll out in the next from say 24 to 26, 27, yeah, in the next 3 years.
Sure, sir. Thank you. That's all from my side, and all the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question of the day. I now hand the conference over to management for closing comments.
So thank you very much for taking the time, and please understand that Punjab, we believe in a strong supply chain, and we will maintain that. With this tough environment, our customers are with us, and we are working together to ensure that the company grows gradually in a way to become one of the number one supplier of various intermediates as well as AIs in the world with the international market. Once again, thank you so much for your time and all the very best. Thank you. Bye-bye.
Thank you. Bye.
Now, I request Mr. Sumit Khaitan from Orient Capital to give his closing remarks.
Yeah. Thank you everyone for joining this call. I would like to thank the management for sparing the time and answering all the questions today. We are Orient Capital, Investor Relation Advisors to Punjab Chemicals and Crop Protection Limited. For any queries, please feel free to reach out to us. Thank you everyone and have a nice day.
Thank you.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.